Hello and welcome to another video. So in today's video, I want to kind of go over the financial aspect of business and business creation and kind of have a look at what the financial side of business creation will look like. So we can call this like your financial, okay, your optics. Okay. The things that give us the ability to kind of like peer into the future as business owners. And what you have to really understand is that, your financial literacy or your financial optics, it's very critical to being successful and making more money, right? So it's a very, very critical part of business creation. More, and then more money. So regardless of whatever muscles you have in relation to, your financial literacy, your financial optics, or anything that you have related to how you understand accounting, like your learning in this area never stops. It is always ongoing, right? It's a part of business that keeps on going, right? And anything that really, when we look at business or when we're trying to measure our progress in business, right, anything that doesn't contribute to learning is waste. And this is an area where you will never stop learning. It's one of those areas where you have to constantly keep making improvements, right? And you have to constantly be aware of. And really, like, I would say that one of the core problems, one of the core problems that business owners let's say entrepreneurs have, or like they face, right? So one of the core problems that business owners or entrepreneurs have, or you could say that they face, is that they don't speak the language. Okay, so when we look at numbers is a language. The funny thing is, the accountants try and make the language as complicated as possible, right? So that's the biggest problem that most business owners and entrepreneurs have. They don't speak the language of numbers. They don't speak the language of numbers. When they look at their, maybe if their business is an airplane and they look at the cockpit of the airplane and they look at all the dials, they don't understand which levers to pull and which dials to look at and what things to touch. So that really is one of the biggest core problems that most business owners, most entrepreneurs face. I mean, the minute, like something goes wrong in their business, they start pulling 14 different things, at the same time, and that's ludicrous, and that's what makes the plane go down. So all businesses, right? So let's go back to our graphs that we really love to draw on this channel. But this is business, right? Business is a series of ups and downs, and that's all business is, right? And the period between, like, let's say, here and here, it's like 10 years. Okay, so most businesses actually fail like halfway through. Like they don't make it past the 5-year mark, or they're around for like, let's say, like 2 years, and then they fail. And this is because the markets go up and down, right? Most people, when they start a business, that's a singular mindset, right? The creation, the multiplication, and the preservation of wealth, it's 3 different types of things, right? It's 3 different mindsets. It's 3 different ways that you can do it, right? Most people figure out the first step, which is wealth creation, right? Wealth creation is easy. They know how to create and ride this wave, They know how to ride the wave. But the problem is, when the wave comes down, they come crashing down with the wave. And then, they'll reach this point here at the bottom, boom, and then maybe like a year or 2 will pass again, and maybe they'll start a business from like here to here, and then shit will go downhill, and then they'll kind of crash with the wave. When it reaches its peak, they'll kind of crash on the way down, and rinse and repeat. And that's kind of like the cycle of business, right? That explains why you see a lot of these stores like popping up, and then they kind of like disappear, and then a few years later, you hear that business owner who had that one store that disappeared. He started a new thing, right? And he's doing pretty well and failed again, right? So they know how to ride the wave. And the thing is, the tide never stops going up and never stops going down. And they know how to ride it on the ups when everything is going well and the tide's like doing extremely good. But then when the tide stops, and boom, like we run out of steam and, like everything goes downhill and we come crashing down with it, right? So we make a lot of money on the way up and we pay a lot of money back on the way down. And that's just kind of like, this whole thing. And when people are at the top, right, this is where they pull, okay, like 14 different things. Okay, they pull 14 different things and they touch 14 different things and they think that this is going to work. And this is really not how it works. Like if you do that, the plane might move, okay, up or down, or might, go to the left or right, but you don't know which one of the things that you pulled caused that to happen. So yeah, this is just one of those things. And making money is not as important as keeping your money, right? So making money is easy, right? This period of year, okay, from here to like here, that's easy, okay? It's your wealth is not measured, okay, on how much money you can make, okay? On how much you make, it's measured on how much you can keep, right? So you want to measure your wealth based on how much money you can keep on the way down, right? That's the most important thing. When that wave is coming down, you want to be able to keep the money that you made, right? And that is probably the most important part of this thing. It's definitely the most important part of business, right? Most entrepreneurs, again, like I said, they fail at the top and they ride the wave to the bottom, and then they start another company and then they do it again and again and again. Whereas if they knew how to ride these cycles, okay, they would outlast a lot of people and they would outlast a lot of their competitors. Now, making money is one of the most easiest things in the world, and everyone will teach you that, right? But when you go out there and you try and search, like, actually, how do I keep my money? There's really no one actually like talking about that. And you have to just ask yourself a simple question, like, how much money would you have if you did not make any of your bad investments, right? If you had the power to turn back time and you could turn back, like, let's say, anywhere from 2 to 5 of your investments, how different would your financial, future be looking now? And that's a really, really important question to answer. And another thing that we have to remember is that, like, progress isn't measured by ground gained. Sometimes it's measured by your losses that you've avoided, right? And most people don't really have the ability to kind of like peer into the future. So, I mean, it's a skill that you can learn, and it's not something that you're born with, right? So now that we have that much out of the way, let's get back to the money side of it, right? The accounting side of it. Now, you can't play the game unless you speak the language. Let's do this in purple. Okay, can't. If you don't. Okay, trying to play a game when you don't speak the language, it's ludicrous, right? Most people out here are really, really struggling with the game of business because they don't understand the numbers, right? They don't understand the language, but accountants do. Accountants know how to speak the language, but they're not really good at teaching the language. And that is why you have to constantly expand, okay, your awareness and stuff in this sense. But really, when it comes down to business, right, there's only, let's say, there's a lot of little ones, okay, a lot of little things to look out for, but there are 3 big things, okay, to keep in mind. So I don't know if we're going to be able to see that color nicely, but let's call them the 3 big ones. Okay, the 3 big things that you need to keep in mind when looking at your business, or the 3 big things that you really need to pay attention to in your business. Okay, again, like I said, there's a lot of small things, but they are these, right? So number 1 Okay, and I'll see if I can kind of draw this for you, but it will look something similar to this. Okay, so it's a piece of paper, okay, that's divided, okay, into 3 sections, and we call this piece of paper a balance sheet. Okay, usually you have your things, okay, and your stuff over here, okay, on one stuff. On one side you have like the things and stuff, right? Your things and stuff. And on, this side of here, you'll have like things that you owe money on, okay, and things that you own. Okay, simple, very, very easy. And this is basically a snapshot. Okay, this is a like a digital camera, right? So someone takes a snapshot of your business in time. Okay, this will generally have like a date in it. Okay, and that's a snapshot of the things in your business, right? The second one, okay, looks something like this. And it's divided into, let's say, like 2 columns. Okay, we call this there. We call this the income statement. Okay, so very, very important, right? You have your on your income statement, right? I don't know, can be called different things depending on where you are in the world. It can be called a statement of account, can be called your statement of operation, sorry, your profit and loss. Like this is where accountants will give things like 20 different names, okay, but they all mean the same thing. So your income statement, right? So your income statement is, let's say, this would be, if this is a snapshot, right, this would kind of be like a movie, right? It will kind of tell you a story. Okay, and really it will be divided, okay, down here. We'll have like something like, we'll have our revenue, and then we'll have that minus our expenses, okay, and then expenses, and we'll be left with, let's say, our profit, okay, over here. Okay, so for example, if you had a revenue of, let's say, 10, and I don't know, your expenses were 6, okay, you'd be left with like a profit of 4, right? So very, very basic and simple to understand. And that will definitely be here at the bottom, okay? And this is the kind of thing that everyone always looks at, right? Most business owners will, look at the income statement and they'll look at the bottom line, right? That's pretty much what they look at. They're looking at their profit, their I don't know, their earnings, their you can call it your profit, you can call it your earnings, you can call it your net income, and this is pretty much telling us a movie, right? So this is like up here, this is kind of like the destination, right? It's kind of like telling us exactly what happened and where our money went, and like our expenses is showing us how we spent our money, so on and so forth, right? And then over here, number three will be kind of like divided into 3 things, right? And like this is your cash flow statement, right? You'll have like operating over here, you'll have investing, and financing, right? So you've got 3 different types of cash flow statements, and they kind of like, like will be in, let's say this dial, or like this thing that you're going to have a look at. If our top one over here, right, is a theory, this one over here is fact. It's also a movie, okay? And it's also a movie, okay? And it's a theory because you can't go to someone and say, hey, look, Mr. like whatever, I would like to purchase XYZ with my profits. And he's going to look at you like you're crazy, right? You need to transform those profits into operating cash, and then you can use your cash to go buy things, right? And so it's pretty much just basically like a theory, right? The cash flow statement is telling you exactly where your cash flow is going, right? That's fact, okay? That's fact. So if you have a look, right, at these three things, these are really like the three most important things that I would say that you need to look at, especially when you're getting started out in business, right? Okay, so let's bring it back, right? So income statement, that, okay, is a movie. An income statement has a beginning and an end, okay? It has a beginning and an end, and it's telling us a story. Okay, let's fix that up a bit, okay? It has a beginning and an end, and it's busy telling us a story. And it's telling a story of whether or not, revenue exceeds expenses, and if yes, by how much. Okay, or it's telling us a story of does expenses exceed revenue, and if yes, okay, by how much. Okay, so very, very like simple, very, very basic, not going into too much detail over here, right? This is just a video on the basics. And a big problem that most business owners make is that, they'll maybe ask for an income statement. Maybe 50% of them will ask for an income statement like once a year, and only 3% of them know how to read it. And that is really suspicious because it sounds a lot like, the success ratio. So whether they do it like once per year or not, a lot of them also look at it like when they do it, they'll look at their tax return. And this is a really, really bad idea, right? Because it's not going to tell you what's going on with your business. Looking at your tax returns is not going to tell you what's going on with your business. It's going to not tell you the information that you need to know. And that's a problem. And that's what a lot of people do. And that also explains why a lot of businesses don't beat the odds, right? Why a lot of them look like this up here, right? They don't beat the odds. The odds seem like, they are against them. And the other thing is, like, the other problem is looking at your numbers once per year. You can't do that and expect to be successful and have the entire picture. And when you do get your income statement, like a lot of business owners, they'll look at this number here at the bottom, right? They'll look at their bottom line, and if it's good, they'll drink, and if it's bad, they'll drink. And that's also why a lot of them are alcoholics, right? Business owners are alcoholics because that's the first thing they look at, and they don't even understand what the hell they're looking at, right? So going back to what I was saying earlier, this is pretty much just a theory. It's telling us whether or not, like revenue exceeds expenses and by how much, and vice versa, right? That's pretty much what it's doing. It's a theory because you can't spend your profits. You can't go to someone and say, hey, like, I would like to buy this thing with my profits. It's not real. You can't buy things with it. You have to convert your profits to operating cash to be able to kind of like, spend it in a way. And then, like I said, it has a beginning or an end. It can give us a overview of an entire month, or maybe even an entire year, right? If needed, it can tell us that whole story. And then going back to cash flow statements, right? So there are three types of cash flow statements, right? Operating, investing, and financing, and they kind of like, they fit together, okay? And like, I'll kind of show you how these piece together in a moment here as well, right? Because you can find these numbers also on your balance sheet, right? But this is a fact, right? This is a fact. It's also a movie. It has a beginning and an end. And it's a fact because it tells us like how much cash we have and how we got there, right? We spent some money over here, and it will look like something like this, right? So it will tell us, how much money we have and how we got there. So it tells us basically the full picture again, snapshot, movie, right? That's exactly how it is. And like when we have a look at these different things, right? So for example, over here, we'll find this number somewhere over here, okay? And then, like, if we have a look at our cash flow statement, right? Our cash flow statement will have a number generally at the bottom. Maybe we could do that in like a different color, okay? And we'll kind of find that number over here. So this is kind of like how the picture kind of like links together, right? And excuse me, and just kind of like wrapping up over here, right? So this hasn't been like an in-depth overview into the accounting side. This is just kind of like to give you a bit of financial optics, tell you how important it is, right? And tell you some of the core problems that business owners face, and how where we should kind of like be focusing our time, energy, and attention, right? So it's just been a quick video on that. But at like going back to accountants, right, at their core, an accountant will take an activity and they will convert that to a number, and then they'll put the numbers on a scorecard. And this is pretty much a scorecard, right? And for example, when you look at a scorecard in sports, it will tell you like this balance sheet, right? So kind of like a scorecard, right? It'll tell you, how much points, you have, like a scorecard, how much points either team has, but it doesn't tell you details. It doesn't tell you who passed the ball to who. It doesn't tell you how many interceptions there was, in the game, and so on and so forth. If you wanted to know that, okay, you would need to understand the activities, okay, and understand how those activities got converted into numbers to start with. So that's pretty much like why you want to, have this whole, financial aspect down as well. So when you look at your scorecard, you'll understand how you kind of got there, right? Like what kind of activities got converted to that, for example. And accountants are really good at taking words and then converting those words to numbers to tell a story. And you need to really be good and get skilled at like looking at the numbers and being able to understand the story just from the numbers. Okay, and that's what I'm trying to tell you guys to do over here. So let's kind of like wrap up, right? We need to, again, kind of like reframe everything over here, right? We need to reframe the entire thing, and we need to really get good at asking ourselves the question: how good is my business at converting profits into operating cash? Because the health of your business will be dictated by how much profits there are, or it's not dictated by how much profits there are. It's dictated on how well you can convert your profits into operating cash. That's pretty much the summary over there, right? And as a business owner, it's our job to go and buy assets, right? Because our things and stuff is kind of like our assets, right? It's our job to buy assets and then convert those assets into sales, and then convert the sales into profits, and then convert those profits into operating cash, right? So that's basically us as business owners and how we want to kind of like go about everything. So on that note, ladies and gentlemen, that has been this week's video for financial optics, let's say, to give you a bit of a breakdown and rundown of where you should be putting your time, your attention, where you should be learning things. And I'll catch you in another video. Till then, bye bye.